Hey folks, Dan Frio here, the rate update, where my goal is to educate and inform you guys everything real estate. So we talk about that, and especially in regards to financing. So today we're going to talk about the PPI, and the PPI number just came out, and it's a gauge of inflation on the wholesale level, and it's the biggest component that the Federal Reserve watches, and it came in really high, at an all-time high. So how is that going to affect the markets? That's what we're going to find out next. So if you're new to the channel, please don't forget to subscribe down below. Give us a thumbs up. And we're here to, again, educate you and inform you everything real estate, especially when it comes to the financing. So let's get to it. So the headline news we see right here, it's the producer prices rose 11.2% from a year ago in March, the biggest gain on record. Oof. Okay, so let's go down through here. The producer price index, which measures prices paid by wholesalers, rose 1.4% in March and 11.2% year over year from last year. The other news we have, it's going to reiterate this same thing. Producer prices rise 11.2% in March, the most on record. We continue through this fiasco and we go down through here. This is the economic calendar. I'm not trying to beat a dead horse here, guys, but I just want to show you something because there's a huge discourse here, and I'm going to show you that here in a second. Producer prices index came in at 1.4. The previous number was 0.9. The expectations was 1.1. So it was way out of the ballpark. And you can fill in some details here. I'll put this link down below so you guys can dig in it to yourself. So let me break down why this is important. So the Federal Reserve, which is if you don't know what the Federal Reserve is, you shouldn't be watching this channel anyways, but they're trying to keep a track on inflation. They have two mandates. They were created for two reasons. One is to help the economy create full employment, and the other is price stability, AKA inflation. Okay, so the PPI is the biggest number that they watch. So when you see a number that came in basically at the highest level ever, what would you think would happen? Well, it would freak out the markets. The markets would say, oh my goodness, inflation is still running rampant. Thus, the stock market would crash, mortgage rates would take off, and everything else. Well, let's look in to see how the markets are reacting. Well, we go to CNBC and anything in green shows up in black, so my apologies. But we have the Dow, which is up 31. We have the S&P up 7. And we have the NASDAQ, which is up over 100. Okay, that doesn't make much sense. Well, let's get on to the reason why you're here. What's going on with mortgage rates? The MBS market should be crashing, right? No. Okay, guys, I'm completely confused. So I'm digging into this all morning since the markets have opened, and I can't find any recourse on what's going on. Okay, so normally, and we've seen in the last, well, especially in the last 3 months, with inflation running rampant, hope you like my new t-shirt, sweatshirt. With inflation running rampant, stock market's been crashing and mortgage rates have been spiking at their fastest pace ever. So what's going on? That's what I'm going to research all day long because I hate not knowing the answer to the why. Okay, but let's get to it where mortgage rates are right now. So the mortgage-backed securities market just opened. Okay, so those that are new to us, and I won't keep beating a dead horse for those that watch every day, but let me just explain what this is. Mortgage-backed security is the biggest instrument. Okay, it is the component that is the biggest part of your mortgage rate. It's not the 10-year Treasury. It's not a Treasury bill at all. It's not the federal funds rate. It's this right here. Okay, so why do we monitor this? Well, this is what's happening to the price of the bond. When the price goes up, the yield or the mortgage rate goes down. Okay, so we love when this is up. Then also, if you scroll down here, the sentiment for the day is positive. It's really positive. I don't get it. And that's what my research is today because, again, I'm going to answer the why, and I'll post later this afternoon to the why. So how is this affecting mortgage rates? Well, Mortgage News Daily posts these rate sheets every day. These are not my rates, but it just gives you a beat on where rates are in particular groupings. Okay, so they haven't adjusted yet for today. So this is basically where we ended last night. These rates are probably going to get a little bit better. Okay, believe it or not. So if you got a quote yesterday, please call us back in today. Or if you got a quote from another lender, please let us know and I'll give you the information at the end of the video on where you can send your loan estimates or your quote so we can review it for you and review it with over 130 lenders in the market. But we go across here, and here's where rates are again today. These are not my rates. These are the national averages. So I'm going to read it like I would read it, and then I'll explain what I just said. So we got the 30-year fix coming in at up 13 basis points to 5.12 with a cost of 0.4. That's my lingo. Okay, so let's break this down, and I'll explain to you what I just said. The 30-year fixed is at 5.12. It is down 13.13. So that means yesterday we were at 5.25. Okay. And it does come with a cost. It would cost you 0.4 in points right here to get that rate. Okay, so how do you figure out what the points are? Well, you take that, multiply it by the loan amount. So for example, if it's a $100,000 loan, you would multiply it by 0.4, hit the percent sign, and that's how much it would cost you to get that rate. Okay, so that's how that is. So let me go across here. We got the 15-year coming in at 4.37. It's down 5 basis points, also comes with a cost. We got the 30-year FHA/VA right in here, coming in at 4.65, down 17 basis points. We had a good move yesterday, folks. We got the 30-year fix coming in at 4.33, down 7 basis points. And we have the 5/1 ARM over a whole percent from the 30-year fix coming in at 4.02, down 6 basis points. We just went over the sentiment for the day. So that's it for today. So what I'm going to do is, I promise you this, I will do my due diligence to see why there's a disconnect in the markets right now. But if you're like, Dan, hey, I like what you guys are doing, what do you really do? So let me explain to you what we do. We're the largest brokerage in the country, mortgage brokerage. What we can offer you is we run your scenario to over 130 lenders in the country. Okay, that's what we do. That's what one of the largest brokerages in the country allows us to do. The biggest question we have a lot of times is, guys, how do you make money? If you're getting me a loan through XYZ Bank, how are you making money? Guys, they pay us a fee. It's basically a referral fee. It's not paid by you. Okay, the dollar figures are not paid by you. It's a referral fee, think of it that way, from the bank for us to drive your business to them. Okay, so that's what we do. We're set up with over 130 different lenders to make sure we scan the whole country for you to make sure you get the lowest rates, best fees, and the right programs. So if you like what we do, please reach out to us. Give us a call, 844-775-5626. You can schedule a meeting, or we even have the new chat button right over here. You can chat with us, and right now it looks like I'm in line. So if you go on there now and chat, you might even see me there. So thanks so much for watching, guys. God bless. I'll see you later this afternoon. Bye-bye.